Good morning, and welcome to today's financial briefing. We begin this hour with breaking developments from the precious metals market, where silver has taken center stage in what analysts are describing as one of the most significant price movements witnessed so far this year. As of this morning, Wednesday, February the 12th, 2026, silver is trading at approximately $83.68 per ounce, marking a dramatic shift in market dynamics that has captured the attention of traders, investors, and financial institutions around the world. Over the past several trading sessions, silver has experienced what technical analysts are characterizing as a parabolic price trajectory. This remarkable ascent began near the $86.20 level yesterday and has now entered what market observers are calling a technical consolidation phase. The price stabilization occurring around the $83.68 mark is being closely monitored as a critical technical pivot point. This development is not occurring in isolation. The movement in silver prices is actively influencing sentiment across the broader gold market, as market participants work to understand the complex relationships between precious metals, performance, and the volatility observed in cryptocurrency assets during this 2026 macroeconomic cycle. The significance of today's price action cannot be understated. Financial data providers are reporting a 300% increase in search interest for the term silver prices today within just the last 4 hours alone. This surge in public attention has been driven primarily by the extreme volatility that traders are witnessing on live price charts across multiple trading platforms. The silver market is currently engaged in what technical strategists describe as a critical test of its recent rally strength. The question now facing market participants is whether the precious metal can sustain the gains accumulated over recent days, or whether a more substantial correction lies ahead. Examining the 1-hour candlestick chart provides crucial insight into the nature of this price movement. Since February the 6th, the trend in silver has been dominated by high momentum buying activity. In a time frame spanning fewer than 6 complete trading days, the metal surged from levels in the low 70s to reach a peak of $86.20. This move represents an appreciation of nearly 20% in price terms, a magnitude of change that is extraordinary even by the standards of the typically volatile precious metals sector. At present, the market is oscillating around the $83.68 level. Technical analysts across both institutional research desks and retail trading platforms are identifying this price point as what is termed a support-turned-resistance test. The ability of the market to hold above this level is being watched with considerable interest by professional traders and institutional investment desks alike. To understand the current situation, it is helpful to draw a comparison between the two primary precious metals. While gold typically exhibits growth patterns more consistent with a large capitalization asset, characterized by steadier, more gradual price movements, silver is currently functioning as what market participants describe as a high beta instrument within the precious metals sector. In financial terminology, a high beta asset is one that demonstrates greater volatility and price sensitivity relative to broader market movements. The heightened volatility currently being observed in silver can be attributed to several distinct but interconnected factors that are shaping market behavior in 2026. The first major driver involves fundamental shifts in industrial demand patterns. Manufacturing data released for the first quarter of 2026 has exceeded the initial projections that economists and industry analysts had forecast at the beginning of the year. Silver plays an integral role in what is being termed the 2026 green technology expansion. Specifically, the metal is a critical component in the production of high-efficiency solar cells and next-generation electric vehicle power grid systems. What was previously viewed by market analysts as a long-term catalyst for silver demand has now transformed into a present-day supply-side consideration. The price movement from $72 to $86 reflects, at least in part, industrial procurement activity. Manufacturers and technology companies are actively seeking to secure physical delivery of silver amid reports of tightening availability in the spot market. The second factor contributing to current volatility involves technical breakout patterns and liquidity considerations. The price chart displays what technical analysts describe as a classic parabolic curve, which has now been followed by a structured consolidation period. On the 1-hour chart, a dotted horizontal line in the range between $83.50 and $84 represents what traders are calling the current market battleground. From a technical analysis perspective, if the market succeeds in establishing what is termed a solid floor at the $84 level during today's trading session, the pathway toward the $90 psychological resistance level becomes a primary focal point for momentum-oriented traders. Liquidity analysis has taken on crucial importance in this context. Understanding the depth and resilience of the market at these key price levels helps traders assess whether current prices can be sustained or whether insufficient buying interest exists to support further advances. The third element driving current market behavior relates to portfolio hedging strategies being employed during 2026. Traders utilizing the Femex trading platform are increasingly observing silver, traded under the ticker symbol SLV, as a potential hedge against what has been characterized as lateral or sideways price movement observed in major cryptocurrency assets during the current week. As market participants work to evaluate whether the cryptocurrency sector will experience a major rebound during the latter half of 2026, capital is being rotated into tangible assets that are exhibiting high momentum characteristics. This rotation represents a tactical shift in portfolio construction, with investors seeking to balance exposure between digital assets and physical commodities. For those monitoring market developments following today's price action, the level of $83.68 provides what analysts describe as a secondary data point useful for evaluating both entry and exit strategies. Silver is currently testing resistance levels that have not been reached since the previous quarter. Volume profile analysis suggests that there has been significant institutional participation in the recent wave of buying pressure. This institutional involvement is viewed as a potential stabilizing factor, as large financial entities typically conduct extensive research and analysis before committing capital to substantial positions. The current movement in silver is also exerting considerable influence on forecasts and predictions for gold prices during 2026. Internal metrics from the Femex trading platform indicate a significant surge in user queries related to gold price prediction 2026. This search term, along with its German language equivalent gold price prognose, popular among European users, reflects growing interest in understanding how the precious metals complex will perform throughout the remainder of this year. The correlation between silver and gold price movements is well established in financial markets, and silver frequently functions as a leading indicator for broader sentiment in the gold market. One of the key analytical tools used to understand this relationship is the silver-gold ratio. Historically, silver has been characterized as the more volatile counterpart in the precious metals pair. When silver demonstrates outperformance relative to gold on an intraday basis, as has been observed during this recent 20% spike, technical analysts often interpret this as a signal for what is termed a broader metals supercycle. Today's significant movement in silver is being viewed by many market observers as a leading indicator for gold-to-tether trading pairs, commonly denoted as XAU-USDT in cryptocurrency-adjacent markets. When the silver-gold ratio undergoes compression, meaning that silver becomes more expensive relative to gold, this development has frequently preceded what analysts call a catch-up phase in the gold market. If silver achieves sustained stabilization above the $83 level, this may provide the psychological confirmation that participants in the gold market require before attempting to drive prices toward the $3,000 mark, a significant psychological milestone that has been discussed extensively in analyst reports and trading floor commentary. Looking at the outlook for the remainder of 2026, many professional analysts are currently engaged in the process of revising their gold price prediction 2026 targets. At the beginning of the year, consensus estimates for gold were relatively conservative, clustering around the $2,600 level. However, the aggressive breakout being led by silver as of February the 12th suggests that a year-end target of $3,200 is now being discussed as what statistical models classify as a high-probability scenario. This represents a substantial upward revision in expectations and reflects the changing dynamics that have emerged during the early weeks of this year. Another important dimension of current market behavior involves what analysts term the safe haven rotation. The 2026 news cycle has been characterized by ongoing geopolitical shifts and significant currency fluctuations affecting multiple regions around the world. In this environment, the rotation of investment capital into precious metals has become clearly evident in trading data. Market participants are utilizing platforms such as Femex to establish positions in gold, represented by the XAU ticker symbol, with the objective of potential long-term value preservation. Simultaneously, these same participants are taking positions in silver under the SLV designation to gain exposure to what are perceived as shorter-term, more aggressive growth trends. Expert commentary from financial strategists emphasizes that silver and gold should not be analyzed in isolation from one another. The price action occurring at $83.68 today is being identified as one of the most significant technical indicators for gold futures contracts during the current month. Historical market patterns suggest that when the white metal, a traditional nickname for silver, tests new high price levels, the yellow metal, a reference to gold, frequently faces similar upward pressure in subsequent trading sessions. This historical relationship is informing current trading strategies and risk management decisions across the financial industry. This concludes part one of our comprehensive market analysis. We have established the current market context, examined the immediate price action, and introduced the key factors driving volatility in the silver market as of February 12, 2026. In the segments that follow, we will conduct a deeper technical examination of specific price levels, explore the European market perspective reflected in trending search terms, and discuss the practical trading strategies being employed by market participants to navigate this period of heightened volatility.